Okay, welcome to today's session on budgeting and forecasting using AI. So, quickly, I will share what we are going to cover in today's session. Before that, I wanted to just check if you can see my screen. Dhawal, is the screen visible?
Yes.
Okay, all right. So, what we will be covering today is understanding first what budgeting is and what forecasting is and what is the difference. Okay, so before we even get into the AI tools and techniques, we'll spend quick 5 to 10 minutes on understanding what budgeting forecasting is and a couple of very important concepts on budgets. So, understanding how the budgeting cycle works and how FP&A teams prepare budgets and forecasts. What is the difference between a normal forecast and a rolling forecast? So these are some concepts which we will spend good 5 to 10 minutes before we get into the AI roadmap or the AI use cases, because the AI use cases will be talking about all of these concepts. So it is important that we clarify these before we get into the AI use cases. Majority of the time, I would say 90% of the time, we will spend on use cases, which we will come to in about 10 minutes from the start of the webinar. So we have about good 3 to 4 budgeting and forecasting use cases that we will be sharing, and that will be interesting. We will get into it as soon as we can. And then we will have at the end 10 to 15 minutes for Q&A. You can type your questions in the chat box. We will take those questions during the webinar if they are related to the topic that we are talking about, okay, or related to the use case or example that we are discussing. However, if it is not related, we will take it at the end. Okay. Also, do wait to the till the end of the webinar, because there is a special bonus which is 30 plus use cases using Claude inside Excel. So we have recorded 30 plus use cases along with case studies and data sets and the prompts which you can use to practice and get started using Claude inside Excel, which is one of the hot topics in finance these days. Okay, so this is going to be our roadmap for today's session. And before we get into the webinar, we will quickly introduce ourselves. So, my name is Asif Masani. I have been working in finance and FP&A for over a decade now, and very specifically in FP&A for more than 10 years. So, started as an analyst back in 2013, and my most recent role was the FP&A lead for APAC for one of the largest tech companies. Into 2023, me and Dhawal decided to start FP&A Professors Institute. And over the last 3 years, we've had incredible opportunity to meet top FP&A experts across the globe, from North America to Europe to Middle East. And what we do at FP&A Professors Institute is we try to bring in all their, not just my and Dhawal's experience and expertise, but every month there is a new expert, or there's a CFO or a FP&A leader coming at the institute and sharing their experience with us. So we try to bring in not just my and Dhawal's experience, but experience of top FP&A professionals across the globe at FP&A Professors Institute, so that our alumni and our community can benefit from that. Also, I am joined by my partner Dhawal Parvatikar. So I'll allow Dhawal to quickly introduce himself.
Hi everyone, my name is Dhawal Parvatikar. I'm a qualified chartered accountant. I've also completed my 1 year general management program from IIM Ahmedabad. Over the last 16 years, I've served as a CFO in India and across the Middle East. I'm now the co-founder and lead faculty at FP&A Professionals Institute. Over the last 6 years, I've been an active online instructor. I've trained and mentored thousands of chartered accountants and finance professionals on various topics like FP&A, finance business partnering, data storytelling, CFO career coaching, and now AI for finance and FP&A. I'm frequently seen in events across the Middle East, somewhere as a speaker, as a moderator, as a panelist. I've also built an active online community of more than 200 plus CFOs across the Middle East as well. So we can move to more than 200 CFOs, and we keep meeting every now and then. Every quarter we meet once, exchange ideas. Personally, we are trying to leverage the CFO community to place our students also at FPI. Yeah, so that's been the journey. This is a quick journey of our institute. We started somewhere in 2022. After that, through multiple training programs and coaching programs, we have trained more than 5,000 students on various topics, with our flagship program being the Certified Global FP&A Professional Program, which we'll talk about it in a while. But yes, students are immensely benefited with all our different kind of programs.
Thanks. Always great to partner with you. And with that, we will get started with today's topic on budgeting and forecasting. Okay. So for just us to get started, we will quickly talk about what is the difference between a budget and forecast, which is a popular question for people who are new in FP&A. Okay. So budget is your target or your plan for the year that you set before the year starts. Okay. And it is done on an annual basis. So you do it once in a year before the next year is starting. While the forecast is your ongoing tracking of the actual performance and the forecast for the balance period or the estimate for the balance period. Okay, so forecast is more frequent compared to a budget. Budget is an annual activity. You do it once in a year before the year starts, while forecast is done during the year and you track closely what the actual numbers are and what is going to be the estimate for the balance period of the year and closely compare that to the budget and make sure and try to do your best to make sure that your businesses are achieving or they are if they are going off target you try to bring them back to the target or to the budget. Okay, so that is what the difference between the budget and forecast is. If I have to quickly explain to you in terms of a quick example, okay, so let's assume that this ship has to go from destination A to B. Let's assume this is Dubai. Okay, A is Dubai and B is Mumbai. Let's say if the ship wants to go from A to B, okay, they would initially set the shortest possible route, which will be the budget or which will be the target. Okay, so they want to get to the target as soon as possible, okay, with the lowest possible resources. Okay, so that is typically the budget, which is the initial plan for the ship to get from Mumbai to or from Dubai to Mumbai. And then while the ship is sailing, they will most likely not be able to follow the shortest possible route. Okay, there will be winds, there will be reasons for the ship to deviate from the shortest possible route. However, they will try their best to stick to that particular trajectory and then get as close as possible to the target and eventually get to the target. Okay, but it may not be in the shortest possible way or in the way that they had decided in the beginning. Okay, so budget is their initial plan when they had started or before they had even started their journey, while forecast is something that gets adjusted along the way based on the current situations and current circumstances. So that is the difference between the budget and the forecast. I'll quickly walk you through how does a annual operating plan cycle look like. Okay, so that is going to be helpful in terms of understanding how the budget works. So typically the budget presentation or the approval of the budget for the next year is one of the important activities in the calendar of any company or any corporate. Okay, so let's assume that the end of the year there is going to be a budget review and approval meeting with the board of directors. Let's say that date is 15th of December. Now, the finance and the FP&A teams will work backwards to make sure that board review and approval that is going to happen on 15th of December happens in the most smooth or most efficient manner. Okay, so for that to happen, the CEO and the CFO may want to review the budget maybe 2 or 3 or one month ahead of time. Okay, because they want to make sure that the budget is reviewed and any changes that they want is made between the 15th of November and the 15th of December. So they may want to review the budget ahead of time and they may want to maybe in this case example is this in this example it is 15th. Now for that to happen, if it's a multinational company or if the company has presence across 5 different continents or 20 different countries, they will need to make sure that they consolidate and review each and in every individual department, region, or business unit, however the company is structured, even before the CEO review happens. So let's say the finance team decide that we want to consolidate everything and review before the CEO review happens, 2 weeks before that. Okay, so in that case, that date becomes 30th of October. Okay, similarly, now they will work backwards and they will plan everything right from creating a budget guideline, from creating budget templates to creating a budget calendar. Okay, so all of this planning will start somewhere in August and September so that they can make sure that the templates are shared good 3 months ahead of time. The meetings and discussions are happening. Department is able to submit the numbers. Okay. And then the consolidation review happens smoothly. So it's usually a 2 to 3 month process in most large companies. And this is how typically a budget cycle looks like, which is starting from the planning. It goes into preparation and consolidation reviews, and then finally the CEO and the CFO review happens. And that's how you freeze that target number for the next year. And that budget number is used for many purposes. Okay, so it is used for assessing the performance of the senior management, assessing the performance of the company. Okay, bonuses and a lot of other decisions are based around the company meeting the budget or not. Okay, so it's an important event and it's an important target, or it's an important event for the company. Okay. So that is how the budgeting cycle looks like. Why I give you the background, because the first use case that we are going to do is around that budgeting consolidation territory. So let me quickly stop sharing my screen and I will bring up the Excel file which we are going to use for this use case. Okay, just give me a moment. Okay, so finally I have the Excel file. Okay, I am resharing my screen. Okay, so let me quickly walk you through the file before I get into the AI prompts. Okay, so what you see on the screen is a departmental income statement from 5 different departments. Okay, this is a hotel chain which has 5 different hotels. Okay, so the first hotel is in Dubai, the second is in Abu Dhabi, third is in Sharjah, fourth is in Oman, and the fifth one is in Bahrain. Okay, so it has 5 different hotels, and each of the hotel has submitted their budget for the year. So you have different templates that you had circulated, and each of the hotel has submitted their budget for the year. Now you are at the head office and you want to consolidate all of these budgets in one sheet so that you can present it and you can analyze it yourself as well. Okay, so what I will be doing is I'll be quickly using Claude to do this. So I will go to the menu in my Excel file and I have a Claude ribbon installed. Okay. Now, today I'm using Claude to do this. I am sure ChatGPT and Copilot will also have such capabilities very soon, because Claude is now able to do it. So they should. So right now, do not focus on the tool. Just see what the AI capabilities are. And I'm sure these will be available with the other tools as well if they are not right now. Okay. So I am giving it a quick prompt. Okay. So let me quickly tell the, okay, I'm talking to it like I'm talking to an intern. Okay, so what I would have said to the intern is, okay, here is a 5 different departmental income statements and help me consolidate it using a template that I have provided to you. Okay, so I'm giving it a prompt, consolidate, okay, consolidate the BU wise MIS, okay, in the console MI sheet. Okay, so very simple prompt. Okay, consolidate the BUIs MIs in the so I'll just make it slightly more specific for the 5 different BUs. Okay, so consolidate the BUIs MIs for the 5 different BUs in the consolidated MIS sheet. Okay, very simple prompt. Okay, I'm now pressing enter. Let me make this slightly bigger. Okay, and let's see if Claude is able to consolidate this. Okay, it says I'll start reading the structure of the consolidated MIS sheet and one of the BU sheets to understand the layout before consolidating. So it's trying to read the format. Okay, so it's read the BU1, BU2, so it's read. Okay, so now it says I have a clear picture of mapping. Let me create the cross. Okay, so it's now started even populating the consolidation. So if you see the consolidation happening live here. Okay, so looking at the different sheets, it was able to consolidate everything and it was able to do that in a matter of less than 30 seconds. If I had to do this manually, I would have to put formulas, links. Okay, it would have easily taken me good 20-30 minutes or maybe more, depending on the number of business units or number of sheets that so it was able to do this in a matter of few seconds. Okay, so most I would say the time saving use case in budgeting would be consolidation, because typically FP&A teams, if they are not using a budgeting tool, if they are doing it manually in Excel, they spend a lot of time consolidating these numbers. And if AI is able to do it very quickly, it saves them that time of manually doing that work, and then they can spend the time more on analyzing the data and asking questions on the budget assumptions. Okay, so that's a quick use case I wanted to share on consolidation. I will stop sharing my screen and I'll see if there are any comments or questions. before we move to the next one. Okay, I have to unmute Dhawal. Yeah, so I think there are no comments, questions as of now, so we'll keep
Yeah, we
going.
can take the questions in the end, Asif. So after understanding the budget consolidation use case, we'll try and understand a little bit about budgeting and forecasting, the difference between budgeting and forecasting. Let's try and understand this with a simple example. So the top table that you see here is a example of a budget for 2023, a very simple budget, oversimplified budget where you have your revenue, your costs, and your profit. So this is what you are aiming for at the end of the financial year, $1.35 million in revenue, 12% of net profit. So how typically forecast works is that forecast is something which is monitoring the ongoing performance of the business, right? So after, let's say we complete, now the budget is actually prepared before the start of the financial year. So this is prepared sometime in October, November 2022, you remember, okay? So now we are at the end of Jan 2023. At the end of Jan 2023, now we have a representation here which says actuals. ACT stands for actuals and FOR stands for forecast, where we have Jan month actuals, okay? And we see that the actuals are lower than the budget that we had planned for. And then from here onwards, what this is called is typically something called as a 1+11 forecast. That is 1 month actuals and 11 months of forecast. Okay. Now, here in this example, it's a coincidence that the amount that you see is exactly same as the budget. What you typically do is at the end of January, you try and retest your assumptions that, okay, whatever the assumptions that I had during preparation of my budget, do they still hold good? If they still hold good, then you take the same numbers as that of the budget. Otherwise, you can also change this. This could very well be 105, 107, 110, whatever the amount you feel is the right representation of the forecast. Okay. Now let's move one step further. Now we are at the end of Q1. At the end of Q1, we have 3 months of actuals and the balance 9 months of forecast. So what is this called? This is called as a 3+9 forecast, where there are 3 months of actuals and 9 months of forecast. Now, if somebody asks you what was my budgeted revenue, I would say 1.35 million. And if somebody asks me my forecasted revenue, I would say 1.36 million, right? So this is the difference between a budget and a forecast. A budget is a one-time activity prepared before the start of the financial year. Okay. Whereas forecasting is more continuous basis. You either do a monthly or a quarterly forecast, depending on the size and complexity of the business. Now, then there is one more concept called rolling forecast. Now, what is that rolling forecast? So here is a table that explains the difference between a forecast and a rolling forecast. The top table that you see is the same table that we saw on the previous slide, which is your 3+9 forecast. In the rolling forecast, what you typically do is you don't stop at the end of the financial year. You try and take a rolling 12-month view. Okay. So at the end of March 23, I would prepare rolling forecast. RF stands for rolling forecast. I would prepare rolling forecast from April to next March. Similarly, by the end of June, I will prepare from July to next June. By the end of September, I will prepare from October to next September. So by the time I reach December, I will already have numbers from Jan to next December, which either I'll make some small changes and label that as a budget, or I'll continue to keep that as a rolling forecast. Okay. A rolling forecast is more agile in your approach, and it is giving you a quick view of how the next 12 months is going to look like, irrespective of when the financial year is ending. So that is the difference between a traditional forecast and a rolling forecast. A traditional forecast looks at the forecast only till the end of the financial year. Okay. So this completed months plus the balance period of the financial year. Whereas a rolling forecast is giving you a rolling 12-month, or in some cases also we can take a 15-month view as well. Okay. So that's the difference between a traditional forecast and a rolling forecast. Okay. So I hope you appreciate the difference between forecast and rolling forecast and budget and a forecast. This is a classic question that any FP&A interview asks you for, to explain the difference between a forecast and a rolling forecast. With that, I'll hand it over to Asif for the second use case on rolling forecast.
Okay, so let me show you one of the tests that we did on creating a rolling forecast. So we will not be doing this live because this took about 10 minutes to do from start to end. So we will not be spending 10 minutes right now. Okay, so I'll be showing you everything in a much faster, or I would say fast forward way. So let me share my screen. Okay, so I started with a blank Excel sheet. Okay, so there was nothing in the Excel file. And let me show you the Claude log on the left, on the right hand side. Okay, so that will let me know if you are able to read the Claude log on the right hand side.
Yes, we can read it, Asif.
Okay, so I started with an absolute blank Excel file and I gave it a prompt saying build a 12-month rolling forecast for a SaaS business model. Okay. With historical data, customer growth, churn, average revenue per user, and auto rolling, meaning it should update when I update the months. Okay. When new data is added. Okay. Include detailed revenue breakdown and P&L with unit economics. Use dummy data. So I wanted to see if it is able to build a rolling forecast model without any background. Okay. So it started building it and it said, I'll build a comprehensive 12-month rolling forecast for SaaS business model. Okay, let me plan this out. So it gave me a outline. Okay, I'll create a dashboard, I'll create assumption section, I'll create the customer model sheet, I'll create the revenue model sheet, I'll create the full P&L and the unit economics. Okay. So model will use 6 months of historical data plus 12 months of rolling forecast. Okay, so whenever the historical data gets added, so I can just add 1 month of historical data and then the model will roll forward 12 months for the forecast. Okay, with formulas that auto roll when the new actuals are added. Okay, so I'll not be going through the entire log, but it took about 8 to 12 minutes or roughly about 10 minutes on an average it takes to do a model like this. Okay, and it goes through each and every section that we talked about, the assumptions and the customer revenue model. Okay, it also ran into a couple of issues in between and it asked me to fix it. It gave me a couple of options and I selected the most I would say the most apt option at that point of time. So it also stopped and paused in between for a couple of times and asked me a couple of questions and I gave the answers. And at the end, it was able to build the entire rolling forecast, which you can see on the. I'll quickly walk you through the output. Okay, so this is the final dashboard, which has all the key performance KPIs. Okay, unit economic summary and the monthly trend, which is the rolling forecast. And let me show you the assumption section. So it built an assumption section. So I can just change the assumptions section here. Okay, so I can make changes here and the entire model will get updated. So if I want to say model start date to some other month, I can do that and the model will get automatically updated. Okay, let me go to the next one, which is the customer model. Okay, I'm making the Claude ribbons smaller for the timing. Okay, so this is the customer count, or this is the customer, which is one of the key drivers for the SaaS model. So beginning of the period customers, new customers, churn customers, reactivations. So all of these walking you through from the beginning of period customers to the ending of period customers, which is basically the volume driver for the SaaS business model. Okay. Then it built the revenue model with the number of customers, which is it built in the previous sheet with the average revenue per user, which is coming from the assumptions, which I can change. Okay, so it built the revenue model, which is three different tiers or three different revenue streams: subscription revenue, expansion revenue, and then revenue from professional services, which is typically a SaaS model. Majority of the money comes from the subscription revenue, and then there are a couple of other small revenue streams. It built the entire P&L. So if you can notice on the P&L, you have 6 months of actual data, and then it has from month 7 onwards, it says forecast and it gives you a 12-month rolling forecast. Okay, and then finally, there's a tab on unit economics, which is key metrics for the SaaS company, which includes your CAC, LTV, payback period, all of those important metrics that are important for the SaaS business model. Okay, so it was able to build this entire rolling forecast model in about less than 10 minutes, which was just using a prompt. And if I want to use this for some other industry, I can just go to the assumption section and I can make changes to the assumptions. I can make some changes to the model wherever required, and I can use this. If I had to create this from scratch, it would have taken more than, I would say, 4 to 6 hours. But because of this AI generated model, I can now quickly make changes and do the same thing in a matter of few minutes. Okay, so this is a use case that I wanted to share, which was on the rolling forecast. I'll stop sharing my screen and let's go to the next topic, Dhawal. Yeah, I'll have to unmute. Yeah, once again.
Sorry, if I keep muting because there's a lot of background noise.
Yes, yes.
I think the next one is the cash flow one. So are you covering that or should I just? go for the CFO presentation directly?
Maybe I can come to that after you do that. So let's
Okay.
do
Okay.
your presentation first.
Okay. So there is one question in the chat box. It says, can we use Claude with spreadsheets? I'm assuming
Yes.
this is other than Excel spreadsheets.
Yeah, so if you mean by spreadsheets other than Excel, so you'll have to check if there is an ability to add an add-in. I am not sure if other popular spreadsheet apart from Excel is the Google Sheets. So I am not very sure at this moment Google is allowing Claude to do that because Google has its own Gemini. Okay, so what could happen is Gemini could be, yeah, Google Sheets. So what could happen is Google could integrate or Google could do something very similar with its own AI model, which is Gemini. And there's no reason why Gemini couldn't have such capabilities. If it does not have right now, it can easily do that in the next few months. Okay, so right now we have not tested the Google Sheets, but it will be the next project for me. So I'll be moving on from Claude to Gemini next month, and so we also use Google Sheet extensively. So next topic up after Claude will be Gemini. Do you have training for us to use AI tools in finance? Yes. So we will talk about those in a bit. Just give us 10 more
Yeah.
minutes and then we'll get to it.
Awesome. So with creation of the budget, we will now move into a different use case, which is about budget presentation for a CFO. So now looked at a use case where we created the budget or consolidated the budget. Now we'll also look at how a budget presentation can be presented as well. So for this, I'm using a tool called Manus AI. Now Manus is again has a very similar interface to your ChatGPT or a Claude, but it has more advanced capabilities in terms of preparing presentations or even doing tasks. This is probably your closest experience that you can get to an agentic AI experience. The other part also is that you can connect a lot of apps here as well. So if you see there are a number of apps that you can connect Manus to, and a lot of autonomous things can also be achieved with this. Okay, so let's stick to today's use case, that is preparing a CFO level presentation. So let's me quickly just bring that up. So before I get into the prompt and the presentation, so I'm sure all of you have many questions, so just focus on the screen for now. We can tackle questions in the end as well. So before we get into the presentation, so let me just quickly show you how the file looks like. So this is a quick real company data for a budget. And here you can see that budget is prepared for 2024. You can see that the budget is actually prepared for 2024 from Jan to December 24. Sorry, Jan to December 24. And you would also have actuals here for 23, 22, and 21. And this not only has the budget, which is the P&L statement, it also has a department-wise summary of the budget where there are multiple departments in the company. They're all revenue generating departments. So there are multiple departments in the company, their budget, their salaries, their profitability, all of that is prepared. This is a service company, so there is a salary register as well. So department-wise salary budget is also here. And then there are some other aspects on freelancer costs, overheads percentages, and all of these things as well. So the multiple sheets as well. Now let us understand what's happening here in this budget. I'll give you a couple of points, okay? One is that you will notice that the overall revenue. Now, this is the overall net sales is your overall revenue line item. This means that what client revenue line item means is that this is confirmed revenue. This is contracted revenue, which you can anticipate for the next financial year. And UNB stands for unidentified new business. So this is a service industry term where I don't know where this business is going to come from, but this business is going to come from some client in the pipeline. So that stands for unidentified new business. The total revenue that I'm anticipating for 2024 is 26.97 million. Whereas in my last year, in 2023, my revenue was actually 27 million. So my revenue is going down by 1.1% compared to the previous financial year. And also my salaries are going up. My salary as a percentage or a staff cost as a percentage of revenue was 52.9%. Now my staff cost as a percentage of revenue is increasing to 56.7%, which means the numbers in 2024 are deteriorating compared to 2023. Okay, so now this is the Excel sheet, which also has the entire P&L, the entire practice-wise summary or the department-wise summary as well, along with the salary reconciliation and salary register as well. Okay. So now let me come to Manus AI and see how Manus can help me prepare a CFO level presentation. So I pasted this Excel file, okay, and I said, I just gave it a prompt. I said, I'm going to share with you a P&L. This P&L has budget 2024 and also the actuals for the previous year. Study this P&L in depth, act like an FP&A leader and using the best practices in storytelling and presentation, prepare a presentation for a CFO who will then use this to present it to the CEO. I'm looking for an 8 to 10 slide presentation with key insights. Feel free to use appropriate visuals to make it sharper. Make sure that you keep the slides less text heavy and minimalistic. The presentation should be landscape format, that is 16:9 format. Now, this is one of the prompting best practices. So whenever you are trying to give a prompt, make sure that you cover these 2 or 3 things. First, you give it the character. The character in this case is the act as an expert FP&A leader. Second is give it some more specific information, the context as well. In this case, I'm saying use a storytelling and presentation best practices. That's the context. And then I'm also giving additional context where I'm saying that this will be used by the CFO to present it to the CEO. And then give it specific instructions that I want this type or minimalistic or more graphics heavy, whatever is the style that you are preferring. Okay? So once I gave this prompt, then Manus is interacting with me here. It said, understood, I will study the P&L. So again, this is all Manus trying to process things on its own. All of this text is something which is trying to use to generate the presentation. So again, it first gave the slides outline. These are the different slide outline that it gave. Started preparing a presentation. So it prepared the first version of the presentation. Okay. And then after the first version of the presentation was prepared, what I noticed was it considered only the first sheet, which was the P&L, and it did not consider the department-wise profitability, which I had showed you. So then I said, okay, let me just come down here. Then I said, why have you not included the information about department-wise profitability? Although the file has information about it along with detailed staff costs. So basically, I'm giving it instructions to include the department-wise profitability and the detailed staff cost as well. It said, okay, you're absolutely right. I missed the department level analysis, blah, blah, blah. It started processing on its own. Okay. And then it just studied the Excel sheet and discovered the key department level insight. It started adding these 2 slides as well. And then finally, it gave me the final presentation, which looks something like this. Let me open this up for you. So typically, when you're doing a budget presentation, you start with the previous year's performance. You start with the 2023 performance in this case, and then you take the audience to the 2024 performance and see what's good or bad with 2024 performance. So that's how this is a CFO level presentation that Manus AI has generated. Again, I'll not change this presentation, but I feel this is about 70-80% good enough for me to kind of give it a touch up and then present it to a senior executive. It started with a summary. Let's say that, and it's also giving a title. Look at this: 2023 excellence, 2024 concerns. Right. So it started with setting the context where 2024 is not that great. EBITDA is dropping, our margin is dropping, our staff cost ratio is going up. So it is giving the concerns right away. Okay. Critical areas of focus, again, some knowledge, I would say, which this slide could have been avoided as well. It's giving a quick snapshot of how 21, 22, and 23 has been in terms of revenue and EBITDA. And then where do we stand in terms of the 2024 budget, just to give a quick comparison as well. It's also translating that into a graphical comparison where it's saying revenue and EBITDA. We can also notice that our revenue has almost remained flat from 23 to 24, whereas our EBITDA is coming down from 8.4 million to 6.3 million. Then 2023 performance highlights. Like I mentioned, it starts with the past performance and then takes you to 2024. 2023 performance highlights. And then 2024, 1% revenue drop, which you already saw in the Excel sheet. Margin compression, 7.4% margin drop, which is a concern. So it's giving some basic information as well. Then again, primary drivers of concern, there's a staff cost increase by $84,000. Staff cost ratio is increased to 56.7%. See, it's also saying that deterioration from 52.9% in 2023. Okay. It's also comparing industry benchmark. Now, I did not ask it to do any comparison with industry benchmark. It did its own research and then said that industry benchmark is 50 to 55%. And then it's trying to compare it with the industry benchmark as well. Then again, a little bit about the costs. What are my top costs? Staff cost is my biggest cost. Totally 74% of my total cost is actually my staff cost. In a service company, typically staff cost is your biggest cost. Then you have your department-wise performance. Now, to me, I think these two slides were the highlight slides. I couldn't have even done better than this. It generated the department-wise profitability and neatly arranged it in a descending order, making it from a highly profitable department to a low profitable department. It's also summarizing it by saying these are my top three performing departments, these are my loss-making departments, right? The overall profit percentage is 6.3 million. And the next slide, this according to me was the hero slide, where it says it simply put my department-wise profitability into a 2 by 2 matrix. On my y-axis, I have the profit, and my x-axis, I have my revenue. So this gave me, these are all my high revenue, high profit departments. These are all my mid-performing departments, and these are all my low revenue, low profitable departments. Okay. It's also giving me this thermometer style heat map where I can figure out which is my high performing departments. These are my high performing departments. It's also highlighting it here in terms of efficiency leaders, ESG, data analytics, and regional are the top performing departments as well. Staff costs, department staff costs are being highlighted here. It's also giving me a benchmark. If you see this red line item here, this is the industry benchmark that it computed on its own, which is a 55%. It's also highlighting all the red items where the staff cost for that particular department is going above 55%. And then all of these blue ones are the ones where it is lower than 55% as well. Again, some highlights on what urgent actions are required. Again, look at the color coding, right? So I did not tell anything, did not give any instructions. It interpreted that all the ones which are critical and require immediate attention needs to be given in red. Something which is medium level, it can be in amber. So it is doing the color coding on its own. Again, giving me summarizing some priorities, what needs to be done, what are the high efficiency departments, what are the learnings that need to be implemented, comparing the past year staff cost as well, how the staff cost has improved from 22 to 23, but again, deteriorated from 23 to 24. What is the reason behind it? What can be done about it? So trying to give some more information as well. Strategic concerns and risks. Again, not all slides are relevant, not all slides are important, but nonetheless, it's done a good job in terms of giving more information, and I can trim it down to CFO level sharper presentation as well. Okay. Giving me key takeaways, path forward. I need to bring my staff cost below 55%. So it's giving me all those indications as well. Now imagine, yeah. So I used a real company data for one of the subsidiaries that, of the group companies that I work with. And it gave me this presentation. Yeah. So not a bad job. I mean, it did a good job in terms of the presentation. So imagine how much time would it take for you to prepare the presentation from scratch, whereas now the tool is preparing this for you, at least in a 60-70% ready state, where you can then refine it and then present it to the CFO finally. Awesome. Let me come back to the slides quickly. Yeah. Asif, shall we move forward?
Yeah, let me do the cash flow forecast use case. So I'll share my screen.
Okay. Okay.
Okay, so now what you're going to see is a quick use case on building a cash flow forecast from scratch. So I'll be opening a blank Excel file. I'm assuming you can see the blank file, Dhawal. What I'll do is I'll go to Claude and I have a backup ready, right? So I've just in case this takes a lot of time, we'll look at the backup, which is already there in my another window. Okay, so I have done this earlier, so just in case if this gets stuck, which does sometimes, okay, so we can use the backup. But for now, I'll try to do it live here. Okay, so I'm giving it a prompt for creating a 13-week cash flow forecast. 13-week cash flow forecast is one of the most common FP&A tool for you to be able to make sure that you have good control on your department's liquidity. So making sure that there is cash or liquidity available, especially if the company is a startup or the company is burning cash, okay, and is dependent on funding or investors' money. In that case, the cash flow forecast becomes even more important. Okay, even if not that, I mean, even in spite of that, I mean, it's a good practice to be able to see how your cash will look like in the short term, or how will your cash balance look like in the short term. Okay, and then you can plan accordingly. So I'm giving a quick prompt which says 13-week cash flow forecast with 4 weeks of historical. So build a 13-week cash flow forecast with 4 weeks of historical. Opening cash, customer collections, payroll, rent, which are the regular payments that usually happen in a in the company. Okay, and the rolling closing balance. Okay, I'm asking you to use the dummy data I'm assuming the same SaaS company. Okay, assume it's a SaaS company and prepare the details accordingly. Okay, so let me see if it is able to build the cash flow forecast from the scratch. Okay, so I'm giving this prompt. So it says I'll build a comprehensive 13-week cash flow forecast for a SaaS company. Let me set this up with 4 weeks of historical data, okay, and 9 weeks of projected data. Okay, so it's building and started adding also. So if you can notice, there's a 13-week cash flow forecast sheet that is added. Usually it takes about 5 to 7 minutes for this entire thing to run. Okay, let's see if it is able to do that quickly. Okay, it says let me set up the. Okay, so it is now doing some setup work. Okay, so it is setting up the different worksheets, the Claude log and everything. Now it has started populating the 13-week cash flow forecast. If you see, the header has come up on the left hand side. Okay, so if you see, you can see the header week 1 through week 13 in the Google in the Excel. Okay, and it is still thinking. So this entire use case usually takes about 5 to 7 minutes. Okay, so the first 4 weeks are now actuals and the remaining are forecast. So let me show you the end output. So we should not be spending 5 minutes while Claude is thinking. Okay, so let me bring the final output here, which is already with me. And this was something which I built while Dhawal was explaining the other use case. So this is the end output, which was the 13-week cash flow statement, which is starting from the opening cash balance, cash inflows, different streams that we saw in the earlier revenue model. What are the cash outflows? So typical cash outflows for any organization: payroll, rent, office utilities, any other supplier payments. Okay, so your cash inflows, cash outflows, total net change, okay, closing cash balance. This is very useful tool for any organization to be able to manage the liquidity position. Okay, so you have the 4 weeks of historical data, and then you have the forecast for the remaining weeks, and then you can plan looking at the cash ending balance. If you need to move some payments to the suppliers to the different week, or if you want to ask one of your bigger customers to pay you early. Okay, so you can do all of those planning. If you are facing cash issue, you can reach out to the bank for a loan. All of those planning you can do once you have the visibility of the cash position for the next 3 months or next 13 weeks. Okay, so this is a good use case. If I wanted to use this for my company, I can use this template and I can just replace the number here and I can then use it for my organization. I'll stop sharing my screen and we'll go back to the presentation. Yeah, I'll unmute Dhawal. So there's a question in my DM. So how much time did so the entire cash flow it took about 7 to 8 minutes. So that is the time with which it took. Yeah, good.
Awesome. Okay. So I hope that gives you some understanding of where we are heading with AI in FP&A. I hope you realize how interesting it would be to grab all the high-paying opportunities by learning AI in FP&A. What we have been doing is we have done an extensive survey with many CFOs, and there are 5 critical skill sets that CFOs today are looking for in their finance teams. Which are those 5 critical skill sets? One is the core FP&A concepts. So where we're talking about budgeting, forecasting, management reporting, business partnering, data storytelling, all of that is your core FP&A concepts. Then comes financial modeling. Financial modeling specific to FP&A, not about valuations or leverage buyouts and all of that, specific to FP&A. Then comes data storytelling. Yes, you can analyze 10,000 lines of Excel sheets, but how do you communicate that as a story to the business is a different skill set. That is where your data storytelling ability comes into play. Business partnering, your ability to collaborate with the business teams, your business acumen, your ability to build strong cross-functional relationships. All of these are important from a business partnering standpoint. And then finally, leveraging the AI and technological developments that are happening to be far more efficient and effective in your finance role. So these are the core 5 skill sets that CFOs today are looking for in their finance teams. So what we have done at FPI is that over the last couple of years, we have tried to build a future-ready finance program. It's called the Certified Global FP&A Professional Program. So this is a certification that is built and delivered directly by CFOs and FP&A leaders. There's 10 comprehensive modules, which we'll talk about in a while. Everything through practical examples that you just saw, experiential sessions, simulations, real life like looking examples, real life like looking data, so that you can get hands-on experience and exposure in FP&A. You will be part of a global alumni network. CGFPA program has been taken by students from more than 25 countries so far. You'll be part of the global alumni community. You'll get personalized sessions with a career coach to tailor any queries that you might have for your finance career, placement support in terms of your resume review, interview preparations, mock interview preps. We also have our own portal. It's called fpnajobs.com, where we are trying to bring the recruiters and FP&A talent on one platform. Access to Q&A sessions where you can ask any questions directly to the faculty. Monthly guest sessions. Asif already mentioned about the expert speakers. Globally, top FP&A experts, tool and implementation partners, digital transformation experts, they come to FPI for guest sessions every month, and you get access to all of that. And everything happens through the comfort of your home, right? So everything is done and delivered through the best-in-class LMS. The live sessions happen on Zoom. So you can take everything from the comfort of your home. And this is all designed for busy working professionals like yourself. Now, the CGFPI curriculum has 10 comprehensive modules. I'll let Asif cover the first 5 modules that you see on the left, and then I'll talk about the modules on the right.
All right. So let me talk about the modules which are on the introduction to FP&A and budgeting and forecasting. So let me start with the introduction to FP&A. So what we do in that module is we give you the basics of FP&A. So if you're not coming from FP&A background, or if you're completely new to FP&A, that module will help you understand the basics of FP&A. How does FP&A team function? What does the FP&A day look like, or FP&A team's month look like, calendar looks like, using examples and case studies. Okay, so that is the objective of that particular module. Then budgeting forecasting module is teaching you the budgeting methods and best practices. So some of the budgeting methods that we cover are your zero-based budgeting, bottoms up, tops down, incremental budgeting, activity-based budgeting, driver-based budgeting. So all of these are important budgeting methods which are taught using examples, case studies. Also, we walk you through the entire annual operating plan cycle that we showed you in the slide today, using a capstone project where you have real life like data, and where you will be preparing the budget, consolidating it yourselves, presenting or creating the budget presentation or the CFO presentation, which we will be presenting to the class. Okay, so that is the entire capstone project on the budgeting annual operating plan. There is forecasting techniques. So statistical, I think somebody mentioned statistical methods of doing forecasting. So we cover different statistical approaches, driver based forecasting. There are different forecasting techniques apart from understanding the seasonality, understanding trends. All of that is covered in the budgeting forecasting module. AI for finance and FP&A is one of the modules that is very popular these days, and we share all the AI and use cases which are used by us and which are used by consultants these days in with their clients. So it's not just me and Dhawal, but there are guest faculties who come and teach different topics on Copilot, and how do you build your own application, or how do you build your own finance app if you want to do that. So we cover tools including your large language models, which is your OpenAI, ChatGPT, Claude, Copilot, Manus, Gemini. So these are some of the large language models tools that we cover. Apart from that, there are also specific AI agents which are used for specific use cases. For example, there is a tool which is specifically used for doing reconciliations. There's a AI agent which is specifically only used for doing forecasting. Okay, so those are specific AI use agents or AI agents that are also covered in the AI for finance and FP&A. So that's a little bit about the AI, and it's constantly evolving. So every quarter we update the curriculum because there's so much of changes that are happening in the AI space. Okay. Management reporting is again one of the core modules where you will learn how to build the common FP&A reports, including your month-end reports, quarter-end reports, flash reports. You will learn different performance management frameworks, including the KPIs, OKRs, balance scorecards. You will learn how to do variance analysis using different frameworks and techniques. You will learn how do you do profitability analysis? What are recharges and allocations? So those are some of the topics that are covered in the management reporting module. And then the financial modeling is also one of the important modules where we share how do you apply the financial modeling best practices and tools and techniques for very specific FP&A use cases. like how do you build revenue models? How do you do scenario planning, sensitivity analysis? How do you do capital budgeting using NPV for long range project or long term budgets or long range projects? So that is a little bit about the financial modeling for FP&A. Okay, I'll let Dhawal cover the remaining modules.
Thanks, Asif. So one thing that will be common in your FP&A roles is that you will be dealing with large sets of data, whether it is financial data or operational data. And that is where you need to know your way how to navigate through these large sets of data. That's why in the data analytics module, we're covering all the essential tools like Power BI, Power Query. Now we are also introducing Python, SQL, Tableau, all of these tools in the data analytics module so that you're at least comfortable using these tools in your day-to-day FP&A roles. Then comes financial analysis. Now, financial analysis is not just restricted to ratio analysis. As a CFO or as an FP&A lead internally within the company, you will be doing different kind of analysis, whether it is horizontal or vertical analysis, different kind of margins, mix analysis. All of that is covered in the financial analysis module through practical examples. Storytelling and presentations I already spoke about. How do you convert your insights into a credible story that you can tell to the business teams, right? So storytelling best practices, presentation best practices. How do you build a presentation? How do you deliver a presentation? What to tell a senior leader in the company? What do you tell juniors in the company or mid-level? How do you present to mid-level staff in the company? All of that is discussed in the storytelling and presentations module. And then finally, strategy. Now, strategy is a very interestingly positioned module. As and when you start becoming senior in your company, your seniors will start talking a certain strategic language. And that is where you need to know, and you cannot use the term strategy in a very loose way. That's where we cover all the popular strategic tools and also show you how FP&A is interlinked to these strategic tools and help companies take strategic decisions, right? So that's the strategy module for you. And then finally, business partnering. It's all about collaborating with various business teams, helping them with their decision making. Both Asif and I have collaborated with various business teams in our career, whether it is HR or production or business development or sales or marketing teams, and help them take certain decisions. So that's where you can truly add value to the business. So all in all, 10 solid modules. Don't just think about this as a course or a certificate. It's 20 years of our blood, sweat, and tears packed into a compact 6-month program. It will easily help you fast track your finance career by a few years. Now, the eligibility, yeah, of course, there are 25 plus case studies that we are covering, 50 plus examples, 10 plus tools covered in the program, 10 plus frameworks. One entire guided capstone is covered here in this. Also, in terms of the tools, we are covering all the popular data analytics tools like Power BI, Power Query, Python, Tableau, SQL. We're also covering the AI tools in the AI module, which is Claude, ChatGPT, Gemini, Manus, Copilot. We are sharing advanced use cases that we just saw. These are all basic use cases. We are sharing advanced use cases in the CGFPA certification as well. So completely an attempt to make you become a future-ready finance professional, right? So that's what the CGFPA is for you. Now, the eligibility for the CGFPA certificate is you need to have a minimum of a bachelor's degree or a global equivalent in finance, accounting, or business. Alternatively, you may have professional qualifications like a CA, CMA, CPA, ACCA, or any equivalent accounting qualification of your respective country. Okay. We are also recognized by CPD UK, accredited by CPD UK. Now, how will you get the CGFPA award? 3 things. One is you need to attend live classes on Saturdays and Sundays. It will be Saturdays 2 hours and Sunday 2 hours. Saturday usually is the FP&A track where we are teaching you the FP&A concepts. Sunday is usually the tool track where we are talking about the tools like Power BI, Power Query, Tableau, SQL, and all of that. So the attendance in the FP&A track is compulsory. At least 50% of the classes need to be attended live. And after somewhere in month number 4 or 5, you will be submitting a capstone presentation, which is an end-to-end budget presentation to the CFO. Okay, all the guidance around the capstone will be given to you. Don't worry about it. Once you do that, you'll be eligible for the final examination. The final examination is it happens once a quarter. It's a 2 hours proctored examination, which has 50 questions and 100 marks. And it's an online examination. You can take it from your home. It's a proctored examination. Once you clear the examination with minimum 50% passing marks, you will get the CGFPA award from FP&A Professionals Institute. Okay. Now, the ROI for a program like this, I leave it to your imagination. The course fee investment in this program is USD 1795. There's also an option to pay it over 5 months. The course duration will be for 6 months. All we expect is a weekly commitment of 3 to 4 hours, okay, where you need to show up on the classes for Saturdays and Sundays. Again, this is designed for busy working professionals like yourself, so we don't expect more than 3 to 4 hours of your weekly commitment. The next cohort is starting on 14th of March 2026. That is when the orientation is happening. The actual classes are going to start from 4th of April 2026. Okay. The date that you need to remember is 10th of March 2026. That is when the second round of applications are closing. Already one round of applications have closed, and there are the seats are filling fast. So make sure that you at least complete the application. The application process is completely free of cost. Once you fill in the application, our academic counselors will review your eligibility. They'll reach out to you with any early bird offers or any offers going on at that point in time. You can also ask for demo lectures. You can also ask for previous alumni phone numbers. You can talk to our previous alumni. Do your own due diligence about the program and don't enroll into it because just because we are telling you to enroll into it. There have been tons and tons of testimonials. Many of them have been able to transition into FP&A roles. Many of them have been able to implement a lot of frameworks that we've shared in the class in their existing FP&A roles as well. Again, there have been dozens and dozens of testimonials. Reach out to enough alumni and they'll tell you how valuable the program has been for them. FP&Ajobs.com is our latest initiative. Make sure that you create a detailed profile on FP&Ajobs.com. Hopefully, your next opportunity will come from FP&Ajobs.com. We're taking a lot of efforts in the back end to bring recruiters and employers on one platform and match them with the right kind of FP&A talent. Again, no promises here, but make sure that you create a detailed profile on fpnajobs.com. Awesome. Just to reiterate the date, the extended deadline closes on 10th of March 2026. Make sure that you at least fill in the applications. The application link is shared in the chat box. Asif has already shared it in the chat box. At least to be in the race for the current batch and let our academic counselors reach out to you. Awesome. All the very best. Keep learning, keep growing. Enjoy the rest of your Sunday. Bye-bye.
Okay, all right. Thanks, Abir. Thanks for joining.